Welcome back. We are going to be diving into lesson 11 today, where we are going to be going over stop loss and take profit. So first, I'm going to go over what is a stop loss. What is a stop loss? This is a preset price where you exit to limit your losses. So stop loss literally protects your capital from your entire account being blown. Now, I have had and entered a trade where I thought I had put a stop loss and I didn't put a stop loss, woke up the next morning, my whole account was gone. So so a stop loss is very important, and I mean, it was like $20,000. It was a terrible, terrible loss, and it was all I had in my account at the time, actually. So I had worked so hard to make 20 grand in trading. And always check and make sure you have a stop loss, because sometimes you'll think you put a stop loss. Always make sure, because that limits your risk. I am very, very big on protecting your capital. This is like the 1% rule. Protect your capital. That's my rule. Protect your capital. We've talked about putting your stops at break even. We've talked about when to put your stops at break even. Have a very reasonable stop loss. Don't over risk. Don't over leverage. And then what is a take profit? All a take profit is a preset price where you exit to lock in gains. This is why risk management is so important. You can lose more times than you win and still be profitable. Let's say you win. Let's say you win 2 out of 5 trades. That's 2 wins and 3 losses. Let's say you're risking $500 a trade, right? So if we're getting a 1 to 2, we are getting our, I want to say profitable ratio of a 1 to 2 risk to reward. We are making $1,000 per trade. We get 2 wins. Each win is $1,000. So 2 times 1,000 is $2,000. So we get $2,000 profit. But let's say we lose the next 3 trades. So don't typically lose 3 trades in a row, but let's just say we do. And then we lose 500, 1,000, 1,500. So we're going to put win $2,000 and lose $1,500. We come out positive $500. And we had more losses than we did wins. So keeping a 1 to 2 risk to reward, you can technically lose more and still make money and not be losing money. You're protecting your capital by keeping a 1 to 2 risk to reward. So let's say you have a $10,000 account, you made $2,000 and you lost $1,500. Now you're left with $10,500. So 1 to 2 risk to reward gives you profitability. So our stop loss placement, we put them below lows when we are buying and above highs when we're selling. So for example, right down here, I've already got our risk to reward ready to go. Let's go back in time a little bit, start anew. So we are bullish. We've got our higher low here, and we've got our higher high here. We have not broken above or below, so we are still bullish. We are at an area of interest. We are clearly reacting to this area of interest. As you can see, we have rejection on this daily. We have, looks like we're having rejection on this daily. Let's slow it down a bit. See what the market gives us. Okay, let's say we get our entry signal somewhere around here. Boom, price starts going up. As you can see, we are bullish. We have now placed our stops at a very reasonable area below this low here, below all of our wicks, and below the area of interest. So our stop loss placement is good. We are aiming for this high, this previous high, this next area of interest right here. So we are in the daily, so this is a daily area of interest. So let's see how the trade continues to go. And we've hit our take profit right here. So we wicked into our take profit. Here, this took us 1, 2, 3, 4 days. So we would have been in this trade for 4 days. We had a very nice stop loss. Got our entry signal. Got in for buys since we are bullish and we are above this area of interest. And now we can probably anticipate the price is going to either come down or break above and continue to go to the upside. So, place your stops. Always below support for buys, above resistance, sells, above and below wicks. There's our stop loss placement. Now our take profit. Our take profit placement will be at area of interest. Target previous lows and highs, depending on if you are buying or selling. I should make that pretty easy right there. Stop loss placement below support, just like we did here, below this area of support, there's area of interest. And we did it below our wicks and below this low. Then our take profit placement here is at this next area of interest, targeting these highs, because we were buying in this bullish market. So the difference between day trading and swing trading is if we are day trading, which you can do, you don't hold your positions as long, and you want to put day trading stop losses and take profits. So our day trading stop loss and take profit trading is more short term, where you're going to have tighter stops, mostly using the 4-hour time frame instead of the daily Day trading typically lasts a few hours to a day. You need to react quicker because you are aiming for smaller price movements. You have smaller take profits, but you still keep your 1 to 2. Still keep you very profitable. 1 to 2 minimums. You'll have multiple trades a day, depending on how fast the market's moving. So that's your day trading approach, more short term. And then you've got your swing trading, which is your longer term. I don't even want to call it longer term, but it's not short like day trading, which you're going to hold, which lasts anywhere from 2 to 3 days to even 1, 2 weeks. But our take profits are bigger. And let's say you are in drawdown, it's a lot more likely that you are going to come back into profit. A wider stop losses, larger take profits, and we're capturing bigger moves. I mean, we're literally riding the trend, trying to catch the biggest move we possibly can by targeting these highs, by targeting these lows. There's some common mistakes that I want to go over that I see a lot of young traders do, and please never do this. This will destroy your accounts. It'll blow your accounts. Your accounts will be nothing. Is moving your stop losses further and further up. So let's say, for example, this is a great example. So let's say I didn't hit my take profit here and I was going for the tippy top of this high, right? Price came way up here. I almost got my take profit hit. It did not quite reach it. And then price decided to turn around. Now we would have had our shifts in the 30-minute and 15-minute, and I would have ended up getting out because I watch the trade and I make sure that my stops are at break even whenever I hit a minimum of 1 to 1. So something like that. So then I'll put my stops at break even like that. But in this instance, let's say I did not put my stops at break even. Let's say I was just either hit my take profit or hit my stop loss, which you can trade that way. But if you want to protect your capital as much as you can, I strongly encourage putting your stops at break even for reversals like this. What you don't want to do is, let's say that price is coming down. Hold on. So everything's looking good. Everything's looking good. I see price coming down here, coming down here. I'm like, oh crap. So I start extending my stop. I mean, look at how much more that I've risked by extending my stop loss. You never want to extend your stops. If it does come and take you out, take the loss or get out at break even. But whatever you do, do not extend the loss. Common mistakes. Extending stop loss during a trade. Another one is not using a stop loss at all. Not using a stop loss at all. For your account's sake, for your money's sake, please, for your own sake, please use a stop loss. Another is risking too much. Only risk what you are okay with losing. And then just keep using this stop loss and take profit strategy. Don't stop using this strategy. I have seen it work miracles in my life, honestly. So the last thing that I want to say is that stop loss equals protection, and your take profit is going to equal your discipline. So let it go up, let it hit your take profit. But there are rare occasions on where price starts to reverse and you need to get out. Or at least put your stops at zero and let your trade get taken out at zero. You guys can screenshot, do whatever you want to do. I hope that this made sense. I hope that this helped you guys to understand your stop loss placements and your take profit placements. And from my experience in the market, if you follow these rules here and you're disciplined with these rules, you will see a difference in your account balance. But I hope you guys have enjoyed this lesson. I hope this makes sense to you. Screenshot this, study it, go back, look, take notes. Next lesson, we will be diving into trading psychology. So I will see you guys in the next lesson.